So good evening, everyone, and welcome to this special class for valuation subjects. And we are going to start the technical session. And time is around 5:30 p.m. And today is 27th of March 2026. And our subject expert faculty and resource person for today's session is none other than our worthy president and CEO of the organization, Dr. Rajvinder Singh Bansal. Welcome to the class. Namaskar, and please take the charge, sir.
थैंक यू संदीप से ज्यादा नहीं होता चलो एनीवे इज इट विजिबल टू ऑल ऑफ यू ओके
Visible, sir.
Yes, sir. Yes, sir.
so we know as a valuer we do the valuation of various properties for various purposes. Now with the changing scenario every day there are always some problems or something is there, as you know, in during COVID season the values of properties were affected. Similarly, in today's scenario, when there is a war, so there are many problems which are affecting the value of the properties. So many times when you do valuation, we have been doing so for the last many years. But the thing was that we just do the valuation, but we are not taking into consideration uncertainty, sensitivity, and risk analysis when we do the valuation. So here IBBI has also mentioned that these things have to be carried out and now today we will discuss what are the uncertainties, what are the things which affect the valuation, and what are the risks when you do the valuation, what were the risks involved which may change the value of the asset altogether. And then we will check how much variation will be there because of a certain fact, what because of a certain reason. So you know there are three methods of valuation. One is income approach, other is market approach, and third one is the cost approach. So first we will discuss what is sensitivity, what is risk analysis. Then we will carry out some examples, one or two examples based upon income approach, some examples on market approach, and some examples on cost approach. A basic criteria is the same. When you do the valuation in income approach, you know the basic criteria will remain the same. So, and during the last few years, the regulatory evaluations, you know, has been, there are many changes in the regulatory evaluation of our valuation field, such as, you know, during 2016 with the advent of RERA, and then with the IBBI coming into picture, with changes of land title laws, zoning regulations, and many other things. Many changes have been made in regulatory framework during the last few years. But the basic thing remains the same. The approaches, valuation approaches, that was income, market, or cost approach, they remain the same. But the thing is, each one is having its unique sensitivities and risk profiles. All the three methods, they are having their own sensitivities, own unique sensitivities and risk profiles. So now we will discuss all these things. So what is sensitivity analysis basically? So what it basically quantifies the impact of change in individual key variable on the valuation outcome. So there are many variables when you do the valuation. There are many variables. Variables means which are not, you know, as an engineer or in mathematics, you know what is variable. Means this the thing which goes on changing, but it affect the overall value of the property. There are certain variables, and most of the times you have to assume the value of the variable. And if you, though there are no hard and fast rules how these variables have to be assumed, but again the responsibility lies with you. You cannot say that there are no rule of assuming the variable. That is why I have chosen this variable. You have to make, you have to assume the variable based upon certain facts. That was what we were doing so far. We were assuming the variable based upon certain facts. But now the time has come. We have to check that if this variable, what we have chosen, what we have assumed, it was having different value, how it will affect the value, total outcome of the value. That is a base thing. That is how it will, how the value will change if this assumption goes wrong. That is what we have not been doing so far. So in sensitivity analysis, what we do, we test one variable at a time. So in sensitivity, we cannot choose all the variables and check its sensitivity for all the variables at a particular procedure, with a particular procedure. We have to choose for checking the sensitivity a particular factor we will be assuming that if we change the value of that particular variable, how it will affect the total outcome. Then we will select the other variable, then we will select the other variables. If there are, let us suppose there are three variables in evaluation, so we will check them one by one. We cannot carry out sensitive analysis altogether. Of course we can do, but the procedure is it is better if you check that one variable at a time. Then it reveals which input drives the most value. Second thing is that when you are doing market approach to the valuation, you are getting a range of value. You are not getting a single value. If you do the valuation with the market approach, of course, you are getting a range of value. Similarly here, when you will be carrying out sensitivity analysis, so whether you are doing it with for income approach, for cost approach, or of course for market approach, you will be getting a range of plausible valuations. So based upon your sensitivity analysis, the lenders, the clients, they will decide what value is most matter for them. What are the things which matters most for them? So it will build a transparency for clients and lenders. That is what is sensitivity analysis. So the next one is a risk analysis. So risk analysis, so basically, you know from its name it is very clear what is risk analysis. Basically, first thing is it identifies, then assesses and quantify potential threat to the investment value. So when you carry out a risk analysis, what it will do? It will first of all identify, then assess and quantify the potential threats, that is potential threat to the investment value. Means what could go wrong? Basically, you have to find out that you have done the valuation and what are the things which can go wrong. First thing is, what are the things which can go wrong? Second thing is, how likely is it that it will go wrong? Whether the risk is medium, whether the risk is higher. And then, what is the financial impact of that thing which we can go wrong?
Incoming voice call from Sharma on 661.
शर्मा जी मैं करता 10 मिनट तक. So basically what we do in risk analysis, we carry out or evaluate regulatory, market and operational risks. What are the different types of risks we will discuss? Here we are just considering what type of risk we can have: regulatory risk, market risk or operational risks. Then assign probability and severity to each risk. How much is the probability that this type of risk may occur? What is the probability of that risk? And what is the severity? How much it can affect the financial, how much financial impact it can make? And based upon these things, we can make mitigation strategies. Mitigation strategies means how can we reduce this impact? Basically, how we can reduce our risk so that this financial impact is reduced. That is mitigation strategies. What should be the mitigation strategies for that particular thing? That we will discuss. And then sports informed decision making, investment decision making based upon these risk analysis, the investor can make better decisions. So together these analytical tools transforms valuation from a point of basically what we do whenever you do the valuation. The main thing is what you have learned so far. You have not, the value you find is not a fact. It is an estimated amount. So IBBI in their caveat limitations and disclosure, they have mentioned that the valuation you give is an estimate. It is not a fact. They have mentioned this thing. But you cannot say that this is an estimate, so I am not responsible. It is not a fact. That is the thing that everyone is accepting that fact. But again, when the lender has to make decision on the basis of your valuation, or some investor has to make the decision on the basis of your valuation. So the estimate should be that it is able to help in decision support framework. So basically, of course you have to make an estimate. You cannot say that the fact, because everyone will give different value for a particular asset. But again, you are responsible for that estimate also, because on the basis of that estimate, though it is not a fact, the investor, the lender makes some decision. So to help the decision support framework, you have to carry out this risk analysis or sensitivity analysis. So, for example, in Indian context, where RERA compliance, land title disputes. So there are many things as on today. RERA compliance, land title disputes, and interest rate volatilities are ever present. Integrating sensitivity and risk analysis into standard valuation practice is not optional. This is not an option nowadays because of these are certain. There are many other facts. Here we are discussing only 2, 3 RERA compliance, land title dispute, interest rate volatility, and if you are doing valuation on the basis of income approach, then vacancy rate, capitalization rate, many other things, many other variables are there. So integrating sensitivity and risk analysis into standard valuation practice, it is not an option now. You have to do that thing. You have to carry out sensitivity and risk analysis. So it is a professional imperative nowadays. So now, first of all, we will discuss the sensitivity and risk analysis in case of income approach. So income approach, we apply income approach in valuation when we are doing valuation for income generating properties. For example, for corporate office parks in Gurugram to retail high streets in Mumbai, which are given on rents or on leases. So basically, the main criteria for such valuation is discounted cash flow model. So far, many of us may not have done valuation on the basis of discounted cash flow. Now we have learned this during our MEP, but hardly we used this discounted cash flow valuation procedure. But when you are doing valuation for especially for leasehold properties and where the rent rates changes periodically and the income also changes annually or biannually, you cannot apply direct capitalization method. You can apply direct capitalization method if the income is constant throughout the lease period. If it changes every year, you cannot apply this direct capitalization. You have to apply discount cash flow method. So we will be taking 2 examples during this webinar, during this presentation, where you can learn the basics of discounted cash flow. And of course, we will discuss about the risk factors which are most relevant in Indian context. So basic principle of income approach, value of the property is present value of all future economic benefits it is expected to generate. So basically, what is the principle or fundamental principle of income approach? It is the value of the property is the present value of all future income economic benefit it is expected to generate. So what we do, we directly convert the rental income streams into capitalized value based upon market derived capitalization rate are discounted over a projected holding period using a risk adjusted discount rate. So there are two things. One is market derived cap rate, which we have done in last webinar, and other one is risk adjusted discount rate, which we use for discount cash flow methods. So in income approach, the framework of income approach is, first of all, you calculate rental income. That will give you the gross income. Then you will calculate operating expenses, taxes, insurance, maintenance, etc. And in rental income, you have to look for market rents, vacancy, tenant quality, etc. And then knowing the gross income and operating expenses, you will calculate net operating income. Then you will decide capitalization rate based upon market sentiment, risk perceptions, interest rates, etc. And then you will calculate the value of the property either on the basis of direct capitalization or on the basis of discount cash flow, where you have to know what is the discount rate, what is the holding period, and what is the terminal value.
देखिए,
Holding
थोड़ा सा
period
आज का टॉपिक आपको बोर महसूस हो रहा होगा क्योंकि बेसिक से शुरू किया जा रहा है और इसमें टोटली आपको वैल्यूएशन से रिलेटेड जितने भी टॉपिक्स हैं सभी आज के चैप्टर में ही पूरे हो जाएंगे। एंड बिलीव मी, अगर आपको कभी कोर्ट की तरफ से या किसी लिटिगेशन के मैटर में अगर आपको रिस्क एनालिसिस के लिए आपको ड्यूटी लगा दी गई कि आप अपनी रिपोर्ट जो आपने दी है उसका रिस्क एनालिसिस करके कल को एक हफ्ते बाद कोर्ट आपको बोलता है कि आप प्रोड्यूस करिए, और उस वक्त आपको किसी थर्ड पर्सन की हेल्प लेनी पड़ी, उससे बेटर है कि आप इसमें थोड़ा सा कंसंट्रेट करें। और बहुत इंपॉर्टेंट है, और इसमें तीनों तरह के आपको अप्रोचेस से आपको बताया जाएगा और पूरा का पूरा आपको पूरा रिवीजन हो जाएगा वैल्यूएशन सब्जेक्ट के बारे में कि क्या चीज होती है, बेसिक कहाँ से शुरू होता है और कहाँ पर हम जाके प्रॉब्लम क्रिएट होती है और हमारी रिपोर्ट को कैसे चैलेंज किया जा सकता है इन केस ऑफ रिस्क एनालिसिस। यस सर, ओवर टू यू।
So, in the valuation income approach, there are three methods. One is direct capitalization, where we calculate the value. We calculate net operating income, we divide it with capitalization rate, that will give you the direct capitalization. It is the simplest one and it is widely used, but it is used when the income is stable. It does not change with the passage of time. And then we use discounted cash flow method. What we do, where we calculate the future net operating income defined over a defined holding period, and then discounts to it to the present value, includes a terminal value at the exit. So what is terminal value? Anybody? You might have studied this terminal value.
It was a part
From
of
where
syllabus also.
terminal value is calculated from where the growth rate stabilizes. Growth rate is constant thereafter. At that point, terminal value is calculated and it is added to this growth periods and present value is found.
So basically, terminal value, what we so let us suppose you have a projection or holding period is 10 years. You know, जी कृष्ण कांत जी प्लीज।
सर जैसे 10 साल के लिए सर अगर हमने कोई भी चीज ली है, प्रोजेक्शंस लिए हैं, तो सर जो 10 साल के बाद अगर मान लीजिए कि हमारी प्रॉपर्टी फिर से वापस आ रही है, तो वैल्यू ऑफ दैट प्रॉपर्टी का आज हम प्रेजेंट वैल्यू निकालते हैं, दैट इज द टर्मिनल वैल्यू.
तो बेसिकली दैट व्हाट इज यू व्हाट आप जो बता रहे हैं, व्हाट यू आर सेइंग, दैट इज रिवर्शन वैल्यू. Here reversion value is in direct capitalization when the property is returned back to the owner. And in terminal value, what happens? In discount cash flow, we will discuss when we will take an example that will make the things clear. What is the difference between reversion value and terminal value? How we calculate that? So just hold on. We will discuss that. The third method is gross rent multiplier. It is not generally used in Indian scenario, but in international valuation, many times this gross multiplier factor, what will they use? They convert the gross rent into, multiply it with a gross rent multiplier to calculate the value of the asset. This is just for initial screening, that how much be the value, just for starting. So we will take an example. First of all, we will discuss what are the things which are key variables in income approach. First thing is rental income.
The things we are going to understand now are common for all the asset classes: land and building, plant and machinery, and securities or financial assets. These things are common. We are trying to concentrate on the basic factors which are important for all the asset classes. Yes, sir. Over to you.
So first we will discuss what are the key variables in sensitivity analysis. So when you do discount cash flow method, its outcome depends upon a set of assumptions. And in the income approach, the sensitivity and final valuation to these assumptions can be dramatic. First thing, which variable is rental income. So basically, in Indian context, in metro cities or in tier 1 cities, what is a general criteria that they have a 3-year lock-ins. So let us suppose the rent is 1 lakh at the start of the first year. They will keep it 1 lakh for 3 years, and after 3 years there will be, after every 3 years there will be 15% escalation clause. Generally it is the criteria, but there it may be 10%, it may be 20%, or it may be annually, but general criteria is, means there are fluctuation in the market rent. These are the things. Now rental income will depend upon, first thing is market rent. Of course, market rent, it will depend upon market rent. Another thing is vacancy rates. So, well, first of all, we calculate the potential gross income based upon the assumption that the building will remain occupied 100% for over the whole period. But it is not so. Many times, some portion of the building will remain not occupied or vacant. So, of course, first thing will be market rent. Second thing will be vacancy rate. Higher the vacancy rate, lower will be the potential gross income. And then tenant defaults. That maybe that tenant has taken your building or rent for say 10 years, but after 2 years he left. He said that I am not able to continue my business, I am leaving. Now what will happen? You have assumed that you have make the projections, or the you have got the projections from the chartered accountant or CA that these are will be the projected rent, but there are chances that after 3 years one of the tenant left So that will affect the potential gross income. And if potential gross income is reduced, net operating income will be reduced, and whatever value you have calculated, that will change. So these are the three things which may affect as far as rental income is concerned. Then operating expenses. Now, in operating expenses, there are many things which may change during the course. There may be that there are changes in the property taxes. So every city has their own procedure of calculating the property tax. You have calculated the property tax based upon today's scenario. Let us suppose after 2 years, the property, they have changed the criteria. Or insurance premium has increased. Now, last year, the companies has increased the insurance premium, or the facility management cost increases, or utility expenses increases. So all these things may affect the potential gross income. If the operating expenses increases, then effective gross income will decrease. And then, of course, the main thing, capitalization rate. So capitalization rates, they depend upon the RBI interest rates. They are inversely moving inversely with the RBI interest rate. If the RBI interest rate changes, if it increases, they will decrease. If the RBI rate decreases, capitalization rate will increase. And then discount rate. It represents the required rate of return that we have discussed how this discount rate is calculated based upon the risk-free rate, in which you have to add market risk premium and property specific premium. So generally, discount rate varies from 10 to 40% for Indian commercial assets. And then, of course, the variable lease terms. So what are the lease terms? So in lease term, the main things you have to look for is duration, rent escalation clauses, fit out obligations, lock-in periods, and tenant credit worthiness. So when you have to carry out sensitivity and risk analysis, all these you have to look for all these things. So as we have already discussed that there are 15 to 20% escalation clause every 3 years, which significantly affects the income projections. And then we will be taking a real world example. We are having, let us suppose, we consider a grade A office building in Gurugram Cyber City, one of India's premier commercial estate submarkets. The base case DCF valuation. So first we will calculate discount cash flow valuation with the help of discount cash flow. That will be used as a base valuation. Then we will carry out sensitivity and risk analysis. So this is the data given to you. Can you carry out discount cash flow analysis of this? Anybody? Every requisite data is given to you. You have a laptop with you, you have Excel with you. Can you carry out discount cash flow analysis of this data? जी sir.
Yes, sir. We can calculate uh, by calculating yearly income. Then WACC is given WACC and growth rate is given G. And then applying using the formula, terminal value is equal to cash flow, terminal cash flow divided by WACC minus G.
So try कीजिए. Data is given to you. Please try. You have Excel with you, the data is given to you. Anybody having any problem with this discount cash flow procedure? See here what is given to you. Gross rent is 120 rupee, 5 rupees per square feet per month. Area is 80,000 square feet. He has already given you that rent will be 80,000 into 120 into 12. It will be 12 crore per year. He has given you it in calculation. Then vacancy allowance is 5%, means 60 crore will be vacancy allowance. So effective gross income you can calculate, and operating expenses are 17.5% of effective gross income. So you calculate that. So net operating income is given to you as 9.4 crore. Risk WACC is weighted average cost. It is given to you as 12%. Then holding period is 10 years. Annual rent escalation is 3 years. Exit rate is 8%. So see here, in the first year, gross rent is 12%. Net operating income you can calculate by deducting the outgoings. Then present value factor. So how you can calculate this present value factor? How will you calculate this present value factor?
This is 1 divided by 1.12 raised to number of year. For first year 1, for fifth year that is raised to 5 line.
Okay, so then present value will be 9.405 multiplied by 0.89298.4 crore. So you can find out the value for all the years. And then you take sum of all these values, that is the value. Now what will be the terminal value? You calculate the terminal value.
Terminal value is D1 upon WACC minus G.
So basically what we do, we assume that this value, we will consider the last year's value, net operating income, for the remaining period. See here, 11 years income we will assume from 11 year onward the income will remain constant as 14.304, and terminal capitalization rate is given to you as 8%. So generally we do it like this. We calculate the terminal value, which is 178.80 crore, but you will get this value after 10 years. So you have to convert it into present value. So 178.8 divided by 1 plus 0.12 raised to power 10. So this is 57.57 crore.
In this case, after 10 years, we are not taking any growth.
Yeah. We are assuming that there is no growth. So basically growth is that after every 3 years, there will be 15% growth. This is what is given to you. See here, annual rent escalation after 3 years, 15%. So you cannot apply this thing in perpetuity. The only thing in such cases is that you assume that this value will remain constant as last year's income, 14.304. So you apply this value, this is approximately 57.57 crore and 60.82 crore is a discount cash flow value. Then the total value will be sum of the present value plus terminal value. Clear? So this is how you can calculate.
टर्मिनल वैल्यू सर ज्यादा होनी चाहिए। उसमें अगर ग्रोथ रेट है यानी 3 साल में 15% बोले तो 1 साल में करीबन 5% ऐसा पकड़ा तो जो डिनोमिनेटर है उसमें 0.08 माइनस 0.05 ऐसा करके वो 286 करोड़ आती है टर्मिनल।
सर वो अगर उसने 5% एनुअल दिया देन यू कैन अप्लाई दैट.
यस यस।
So it is not 5% every year, it is 15% after 3 years. Problem is that. That is why you have to apply this method. You have to be on conservative side. Instead of 178.8, that will be 200 something. So this is total value 118.39 crore. So anybody having any doubt about this discount cash flow method and terminal value? So now we will check how how the things which we have assumed, if we change that assumption, how it will affect the value, how sensitive it is. First thing is we have assumed the discount rate as 12%. We have calculated this 12% discount rate on the basis of that government securities are at 7%. Plus, we have added a risk premium of 4.9% for market and property specific risk. And we have assumed 8% terminal cap rate aligns with the recent comparable transactions in NCR commercial corridors. So these are the basic things. On the basis of this, we will check its sensitivity. Now we will check how if the vacancy rate which we have assumed as 5%, if it is higher, how it can affect the value of the property. As in the case of COVID-19. So during COVID-19, what happens? there was structural shift towards hybrid working continue to pose challenges. So if the vacancy rate is changes, how this value which
अभी मार्केट बहुत फास्टली चेंज हो रहा है, और अभी अगर आप एज अ वैल्यूअर सिर्फ लैंड की वैल्यू और बिल्डिंग की वैल्यू लैंड और बिल्डिंग मेथड से निकाल रहे हैं किसी भी प्रॉपर्टी की वैल्यू, देन यू कैन बी इन ट्रबल, या फिर रेस में आप पीछे रह जाएंगे। अभी जो वैल्यूएशन के रिलेटेड काम आ रहा है वो लैंड एंड बिल्डिंग का, लैंड प्लस बिल्डिंग का नहीं आ रहा है, लैंड एंड बिल्डिंग मेथड से नहीं आ रहा है। अभी आपको कस्टमर पूछ सकता है टर्मिनल वैल्यू क्या है, या मुझे यहाँ पर किस स्टेज पर एग्जिट करना चाहिए, या मुझे किस स्टेज पर इनपुट करना चाहिए, या मेरी ये प्रपोजल है, 2 या 3 प्रपोजल है, उनमें से कौन सी मुझे फिजिबल होगी। एमएनसी आपसे पूछ सकते हैं, या फिर इंटरनल रेट ऑफ रिटर्न्स के ऊपर आपसे वैल्यूएशन मांगी जा सकती है। तो सिर्फ लैंड एंड बिल्डिंग के पीछे अगर आप सोचते हैं कि मैं बहुत बड़ा धुरंधर हूं, इट इज नॉट पॉसिबल। लैंड एंड बिल्डिंग को छोड़िए, अभी उससे आगे बढ़ने की कोशिश करिए, और मेरी कोशिश, हमारी कोशिश यही है एज अ ऑर्गेनाइजेशन के आपको हर प्रैक्टिस करते वक्त आपको हर तरीके से आपको वैल्यू करने के लिए आना चाहिए। आपके पास कोई क्लाइंट आता है तो आपको रेवेन्यू लॉस ना हो, या आपको लॉस ऑफ दैट पर्टिकुलर प्रोजेक्ट ना करना पड़े, और आपको उसके बारे में पता हो। ऑफ कोर्स उसके अलावा अगर लिटिगेशन में आपकी कोई वैल्यूएशन जाती है तो यू कैन बी एबल टू डिफेंड योर सेल्फ बिफोर टेकिंग अ हेल्प ऑफ एन एडवोकेट और एनी लॉ पर्सन। उस पर पैसा खर्चने से पहले आप ही उसको डिफेंड कर सकें तो बेटर है, बात बिगड़ने से पहले ही आप उसको संभाल सकें। यस सर, ओवर टू यू।
तो देखिए अब ऐसे we have discussed that what are the things which may affect which how the value is sensitive to particular assumption. For example, let us suppose a major tenant vacates floor 4 and 5 approximately 20,000 square feet. During the holding period, one of the tenant left. He was holding 20,000 square feet away of the area. Now, what will happen in such scenario? So, what we assume the vacancy rate as 5%, and it has increased from 5 to 25%. And let us suppose it remains 25% for 18 months, 1.5 years before releasing of course. So how it will affect the value? Let us suppose the effective gross income we calculate for this 20,000 square feet, the effective gross income approximately dropped by 3 crore in third year. And then when you have to release, you have to make certain concessions to the new, you may have to give certain concession to the new lessee. You have to pay certain commission to the broker. It is not easy to realize that part. You have to take that things into consideration also. Means one is effective gross income decreases. Second thing, let us suppose it when it was released, a 1 month's rent was given approximately 25 lakh to the broker, and then to attract the client, certain incentives are given for CA of 40 lakh rupees, that also. And for that, the rate which you have assumed as 12%, that has to be, that may be pushed by 50 bps. Means of start of 12%, you may have to consider 12.5%. So what will happen in that case? So value which was 118.39 crore which you have calculated with 25% vacancy scenario for 1.5 years, the value will come out down to 103.91 crore. Means there will be a drop of 12.2%, approximately 14.47 crore drop in the value. So from here you can see that with every increase of 5% vacancy rate, it reduces the value by approximately 2.5 to 3.2 crore depending upon the re-leasing and such. So we have assumed 5%. For every additional 5%, the value may reduce by 2.5 to 3.2 crore. So here you should learn the things. So it is not merely the lease rent that is affecting. It is not merely the lease rent, but re-leasing cost, incentive packages for new tenants, and potential repricing of the risk may depress the value. So when there is vacancy, it is not only the vacancy. Many other things are also related to this. There may be many other things, but we are discussing which are the main things related to it. Re-leasing cost, incentive packages to be given to the new lessee, and the potential repricing of the risk by the market that collectively depress value. So it is not only the vacancy, but there are many things related with the vacancy that will affect the value, that will depress the value. And then the second thing, sensitivity analysis, impact of capitalization fluctuations. So capitalization rate, this is a single most factor that can change the whole scenario. See here, we have assumed 12%. Oh, sorry, we have assumed terminal value. For terminal value, we have assumed 8%. Value is 118.3. And instead of 8%, you assume 7%. See here, value is 126.61. And if you assume 8.5, value comes down to 115. If you take it 9%, value comes to 111. And if you take it to 10%, value comes down to 106.91. See how the value changes with the change in the terminal value capitalization, terminal cap rate. So as the terminal cap rate increases, the exit value of the property decreases, leading to an overall lower DCF value. Conversely, if lower cap rate assumes 7%, higher exit value will be. Now this is sensitivity analysis. Now we come to the risk analysis. Tenant default and lease structures. In India's commercial real estate, tenant concentration risk is frequently underestimated threat. Building where a single tenants. So main problem lies what? Buildings where a single tenant accounts for a large proportion of rental income are structurally vulnerable. That is important thing. When you do the valuation, you have to check if there is only a single large building, and only there is the most part of it is occupied by or leased to a single tenant. And if he default, if he left, the whole scenario will change. That is a problem. So because of let us suppose because of corporate restructuring, bankruptcy, or any other condition, that tenant can devastate net operating income virtually overnight. So when you go to the valuation and you see a single tenant is occupying the most part of it, that is most vulnerable valuation. So now we will take risk analysis. We will take all these things into consideration: value versus rent escalation, WACC, and terminal capitalization rate, how they changes. Let us suppose after 10%, we have assumed 15% every year, every 3 years. Let us suppose increment is 10% every year, every 3 years. 10% capitalization rate instead of 12% capitalization rate, we change it to 10%, and terminal rate, let us suppose it is 8%. We changes these two parameters. One, escalation rate, and we changes WACC, that which was 12%, we change it to 10%. See how the value changes. The value which was 118.3 now, then it will come 122.5. And if we increase, instead of decreasing it by 2%, we increase by 2%, value will come down to 95.6. Similarly, 15 years, this is a base which is 118.39. Instead of 12%, if we take 10%, the value will be, see here, how much difference is there? 16 crore difference with the 2% change or 200 base point changes, BPS change. And if we increase it, it decreases by 14 crore. Similarly, instead of 15%, if the escalation is 20%, see here how it changes. See the difference. This table gives you the details how it can affect decreasing or increasing the escalation cross or changing the WACC together with that. Means moving from 10 to 20% cross every 3 years, the value increases by 20 to 25 crore. Similarly, if we change by 2% in the WCC, 10 to 12%, or 12 to 14%, value moves by 20 to 30 crore.
Incoming.
And similarly, terminal cap rate we have not changed. We will see that if we change it from 7 to 9%, here we have seen it changes, how it changes. So there are basically 3 points: WACC, that is risk factor, then terminal capitalization rate, and risk escalation rate. There are 3 most sensitive levels in this case. Now here we take all the three things into consideration for risk analysis: WACC, terminal capitalization rate, and risk escalation. We take all the three things into one analysis. See here, value which is 118.39, which is a base value, how it changes. If it is 10% every 3 years instead of 8% capitalization, terminal value capitalization, we take 7%. WACC remains 12%. See here, WACC remains 12%, let us suppose. Now we change the terminal capitalization rate and rent escalation. How it changes? The value changes from 118.39 to a minimum of 99 and a maximum of 140.5. So as we increase the rent from 10 to 20% every 3 years, it will remain 20 crore to the value all across all capitalization rates. Value changes. Similarly, capitalization rate, if it move from 7 to 9%, value changes from 20 to 25 crore, variation of there. And WACC impact we are not shown here. So the valuation ranges across realistic scenario is 95 to 145 crore. See here, value is approximately 95 to 145 crore from where various analysis we have found out. And we are in between that 95 to, so your base case sits right in the middle, approximately at 118.3. We are in between the minimum and the maximum. So basically now from these things what we find out that one thing, if there is a single tenant, let us suppose he is occupying 40% of the leasable area and he faces financial distress. Probability assessed at 15% over a 5 period and the tenant credit ratings. So what financial impact it will do? So basically this is what we have learned from here. There will be loss of 40% rental income for 12 to 18 months releasing period. There will be net operating income will reduce by 3.676 crore per year, and the net present value will be decreased by approximately 10.5 crore. This is what we have learned. So what we do, what we should suggest to the owner, if you see there is single anchor tenant, but as a value, what you should suggest to the investor, that diversified tenant base to limit single tenant exposure to less than 20%, less than or equal to 20%. That the investor should not give more than 20% of the leasable area to a single tenant. What we have learned from here. And what else he can do? He should have a required security deposit of 6 to 12 months rent, so that tenant cannot make a default. And of course, if there is a company, then they can obtain personal guarantees and parent company guarantee, and include robust termination compensation clauses. This is what you should suggest What are the mitigation strategies? So a thorough tenant due diligence process examining financial statements, credit ratings, business outlook, and lease renewal intentions is an essential component of income property valuation. So this is where we are lacking. We just take only lease review. Other things we do not do. But in today's scenario, you have to examine. That is why you have learned bookkeeping and accounting during your MEP. So what are the other things that may affect the risk, that may increase the risk? Regulatory changes. These may also affect the risk factor. In India's regulatory environment for commercial real estate, it varies from nowadays, uh, on the rent, this GST has to be paid on the rent receipt. With a change in the GST rate may affect. Then changes in the stamp duty, changes in the floor space index norms, changes in the calculation of property tax methodologies. So these changes can materially affect both the income and the cost side of property's financial performance. So creating valuation risks. So you must be proactively identified and quantified. For example, if we take a property tax reassessment risk. So many times the metro cities like Mumbai and Delhi, they revise their property tax assessment. If there is 30 to 50% increase in the property tax, which is not uncommon in after city-wide assessment. So what it will do, it will directly reduce the net operating income. For example, if 40% there is 40% increase in the property tax, it will reduce the net operating income by 0.48 crore annually. If there are FSI or zoning changes, changes in the floor space index regulations, these can also affect the potential of land comparative attractiveness. For example, in Bangalore's revised FSI norm in 2023 created significant re-rating in certain corridors. And then nowadays, because of increasing stringent environmental norms such as green building mandates, energy efficiency standards, it may require capital expenditures on retrofittings, etc., for which estimated cost for LEED or gold compliance for a building is 150 to 200 per square feet. That may also affect the value of the building. So this is sensitivity and risk analysis for income approach. So these are certain factors. There may be many other factors which we have not discussed here. that may affect, that may involve risk, that may attract risk. So any doubt about this income approach?
देखिए, अगर आप इनकम अप्रोच से कोई वैल्यूएशन करके दे रहे हैं और उसके बारे में आपसे रिस्क एनालिसिस के बारे में पूछा गया है, तो देयर आर सर्टेन थिंग्स व्हिच वी हैव डिस्कस्ड टिल नाउ इन दिस सेशन। अगर उसके बारे में आपको कोई भी डाउट या कोई भी क्वेश्चन या कोई भी क्वेरी है तो आप पूछ सकते हैं, so that the topic can be more clear in your mind, as well as you can do the necessary things whenever a professional commitment is required. Any doubt? No doubt? सबको समझ में आ गया है या उल्टा है बिल्कुल?
सर ये उल्टा ही रहता है ऐसा बराबर।
सब बाउंस हो गया है।
सब
सही
नॉर्मल
है सर।
प्रैक्टिस नहीं रहता ना
ये
इत्यादि।
इसमें
सर प्रैक्टिस में
इसमें
नहीं रहता ना तो सब
practically
भूल जाते हैं।
हाँ जी,
खुद असेस करने की जरूरत है कि किस कंपोनेंट का वेटेज कितना होगा। वो असेसमेंट काम करके ही आइडिया लगेगा, वर्किंग करके आइडिया लगेगा किसका वेटेज कितना। उसके
बिल्कुल।
लिए वर्किंग करने की जरूरत है। ऑल पैरामीटर्स में नॉट बी रिक्वायर्ड ऑलवेज।
बिल्कुल, एग्जैक्टली
You have
एग्जैक्टली।
to take a call which is the most predominant factor which is affecting the ultimate value. है ना
बिल्कुल।
सर?
अगर आप इसको थोड़ा सा प्रैक्टिस करेंगे तो आपके माइंड इस तरफ सोचना शुरू कर देगा कि क्या क्या रिस्क हो सकता है। मैंने जो वैल्यूएशन दी है, अगर ये कहीं पे चैलेंज होगी तो मैं इसकी रिस्क एनालिसिस कैसे करके दूंगा और मुझे कहाँ अपने आप को डिफेंड करने का बेस्ट अपॉर्चुनिटी मिलेगी कि मैंने जो वैल्यू दी है इट इज परफेक्टली करेक्ट एंड करेक्टली एज्यूम्ड बाय मी। अगर आप इस तरीके से अपनी वैल्यूएशन करने के बाद 5 मिनट या 10 मिनट रिस्क एनालिसिस सेशन में लगा लेंगे या इस सेक्शन को थोड़ा सा अंडरस्टैंड करके वैल्यूएशन देंगे, तो आपके चांसेस बहुत ज्यादा बढ़ जाएंगे कि आपकी क्रेडिबिलिटी और आपकी एज अ वैल्यू और वैल्यू बढ़ती चली जाए इन प्रोफेशन। यस सर, ओवर टू यू।
इसमें फोर्स मेजोर क्या कोई वो तो अनडिक्लेयर्ड ही होता है फोर्स मेजोर सिचुएशन।
तो सर
है ना
डिस्कस
सर?
करते हैं हम, सारा कुछ आएगा। So ऐसी another case for income approach, तो जैसे मतलब कि हर साल नहीं इंक्रीमेंट हो रहा, तो अगर sorry, after escalation is not every after every 3 years. If it is escalation is every after 8 years. See here. We have taken a case where escalation is every year. So in that case, what sir has told, we have to apply this method. Well, we have taken example for 5 years. So we will take the net operating income of the 5th year, that is 12 crore 15 lakh 506. Formula is multiplied by 1 plus G divided by terminal capitalization rate. So the value comes out to be 1 crore 59 lakh 59,141. We take its present value of terminal value, that is approximately 90 lakh 57,000 approximately.
देखिए, अगर आप अपनी वैल्यूएशन रिपोर्ट में सिंपल चीजें लिख कर देंगे तो आपको कोई वैल्यू नहीं करेगा। देखिए, ये आपको अपनी वैल्यूएशन पहले करनी चाहिए कि आपकी जो वैल्यूएशन जो आप करके दे रहे हैं, जो रिपोर्ट दे रहे हैं, उसकी वर्थ 1,000 रुपया है या 1,00,000 रुपया है।
Incoming voice call.
अब आप उसी रिपोर्ट के 1,000 रुपए भी आपको कोई नहीं देता है। हम लोग उसी रिपोर्ट के मांगते हैं 1,50,000 रुपया, हमें हंसकर देते हैं एमएनसीज वगैरह। क्यों देते हैं? क्योंकि इनपुट उतनी जितनी उसको चाहिए आप अगर नहीं देंगे तो वो आपको फीस कभी भी नहीं देगा और अगली बार से आपको काम भी नहीं देगा। हर रिपोर्ट में वेदर जरूरी है या नहीं है, आप वो चीज जरूर डालिए जो एक क्लाइंट को चाहिए। हो सकता है उस क्लाइंट को ना चाहिए, लेकिन वो रिपोर्ट जब कहीं ना कहीं जाएगी या कहीं ना कहीं आगे प्रेजेंट होगी, देन इट विल एक्ट एज अ विजिटिंग कार्ड फॉर यू, एडवर्टाइजमेंट बैनर फॉर यू। वो आपकी अपनी कैपेबिलिटी को रिफ्लेक्ट करेगी कि ये आदमी इस तरह से रिपोर्ट बना रहा है। अगर कोई कैपेबल क्लाइंट होगा और उसको उस तरह की रिपोर्ट चाहिए होगी, वो इमीडिएट आपको कांटेक्ट करेगा। ये सर्कुलेशन के लिए ये रिपोर्ट्स, अभी जैसे मैंने आपको बताया, अभी जितनी भी रिपोर्ट्स हैं, ये कोई उसको दबाकर नहीं रखेगा। ऑल रिपोर्ट्स आर गोइंग टू बी पब्लिक वेरी सून। आपने आईबीसी के लिए कोई भी रिपोर्ट कहीं भी दी है, दे आर गोइंग टू पब्लिक इट वेरी सून ऑन द पब्लिक प्लेटफॉर्म। उस वक्त आपके जो प्रेमी लोग होंगे वो आपकी गलतियां ढूंढ ढूंढ के निकालेंगे। अरे ये देखिए उस प्लेटफॉर्म पे ये रिपोर्ट पड़ी हुई है, ये तो उन्होंने गलत की है, तो कैलकुलेशन गलत की है, ये तो उन्होंने असेसमेंट गलत की है। देन आपको चैलेंज किया जा सकता है, और जब चैलेंज किया जाएगा तो आपके पास डिफेंड करने के लिए कुछ नहीं होगा। तो अगर आज से ही आप सोचना शुरू करेंगे तो आगे आने वाले टाइम आपके लिए बहुत ईजी होगा। अदरवाइज इट विल बी टू डिफिकल्ट टू सर्वाइव इन दिस क्रूअल वर्ल्ड। दिस वर्ल्ड इज गोइंग टू बी अ वेरी क्रूअल इन फ्यूचर डेज, बिलीव मी। और अगर आप प्रॉपरली चल रहे हैं, एवरीथिंग विल बी इन ग्रीन। बहुत आसान होगा काम करना। यस सर, ओवर टू यू।
So see in this case, the approximate value is 1.3 crore. Out of this 1.3 crore, terminal value is 90.6 crore lakh. Means approximately 70% of total value. So see here, as the holding period increases, terminal value will decrease. Its dominance will decrease. Here the dominating factor is this terminal value. So you will learn all these things when you practice these things. So what are the factors? So here in this case, see here, total value is 1.3 crore, and out of this 1.3 crore, 90.6 lakh comes from the terminal value. So most of us have been ignoring this terminal value in discount cash flow method. पहले तो कभी किसी ने डिस्काउंट कैश फ्लो मेथड लगाया ही नहीं होगा, अगर लगाया होगा तो टर्मिनल वैल्यू कभी ले ही नहीं। और अगर यहाँ पे देखो इस क्वेश्चन में, अगर यू सी दिस क्वेश्चन, 70% of the value come from the terminal value. First thing, and second thing, you see if the holding period is lower, the dominance of terminal value will be higher, and as the holding period increases, the dominance of this terminal value will go on decreasing. That you should keep in mind. This is just an example to make the things clear. Because Sandeep ji, we can have it short break.
जी, यस सर।
थोड़ा ऊपर से जाना शुरू हो गए अभी।
थोड़ा बाउंस हो रहा है सर।
थोड़ा
चाय पियेंगे तो थोड़ा सा शायद काबू आ जाएगा। So friends, let's take a short tea break for 10 minutes. It is around 7 p.m. now. 7:10 पे दोबारा जुड़ेंगे. Then we will continue with the more interesting topics. Till then, you can switch off your screen. जुड़े रह सकते हैं, लेकिन स्क्रीन ऑफ कर सकते हैं.
income approach and how the sensitivity and risk analysis is carried out in income approach. Now we will start with our next approach, that is market approach. So in market approach, we value of the asset is done on the basis of observable market transactions. But as far as India is concerned, here the data, limited data is available, and that too transparency, that the data is actually transparent or not, that is also the problem in Indian conditions. So now this method is used, but the basic thing is the data, on the basis of which you do the valuation, and of course the transparency of the data. So we will try to do this analysis. Its vulnerability lies in quality, recency, and true comparability of that evidence. When you do the valuation on the basis of market approach, the basic thing that is important in this case is quality of the data, transparency of the data, and true comparability of the evidence. Because data are partially documented in Indian landscape. So as you know what we do, first of all we identify the comparables in market approach. We select recent similar sale transactions in the nearby of the asset of which you have to do the valuation. Then you apply property adjustment for property differences, for accounting for size, features, and condition variances. Then, but before applying this adjustment for differences, first of all, you have to apply adjustment for time. In market approach, first adjustment is done for the time. So adjustment for sale date and market movement. First of all, this adjustment is done. Then we apply for adjustment in size, features, and condition variances. And on the basis of this, you reconcile the final value adjusted comparable to estimate the value. So basically, the main principle of market approach. All of us know this basic principle. It is based upon the economic principle of substitution. That a rational buyer will not pay more for a property than the cost to acquire an equivalent substitute. That is the basic principle of market approach. So it is generally a sophisticated method and is generally used in metro markets. So how we do it? First of all, we identify 3 to 6 recent sales of similar properties. And these ideal comparables may be within 500 meters of the subject property which have been sold within 6 months. And of course, they are of similar size, age, and quality. Then we calculate from the sale points, we calculate the price per square feet or per unit, basically we say per square meter, per square feet, based upon carpet area, because in today's scenario, all the transactions are done on the basis of carpet area. So we will be calculating per unit value on the basis of carpet area. As you know, RERA has mandated that everything should be on the basis of carpet area. Then we make adjustment for time, location, size, floor level amenities, view, parking, age, condition, etc. And then on the basis of these weighted adjusted comparable value, we calculate and give final reconciliation. So basic thing you should know is the distinction between super built up area, and carpet area. That is important thing. As a valuer, you should be able to differentiate between these three terms. So what are the key variables? As we have done in the case of income approach, here we will discuss what are the key variables for market approach. In the market approach, sensitivity analysis examines how changes in the market condition. First variable is changes in the market condition. Then comparable data quality. And of course, adjustment assumptions affect the final value. That how much adjustment is to be given for a particular factor. So there is no hard and fast rule, but it must be on the basis of certain criteria. Otherwise, you may not be able to defend your valuation. So these three things are important from sensitivity analysis point of view. First country is market condition. Second thing is comparable data quality. And third thing is adjustment assumptions. These three things can affect the final outcome, final value conclusion. So basically, they are more, this method, valuation by this method is more sensitive to market-driven variables, which was not the case of income approach. This method is more sensitive to qualitative and market-driven variables. So as far as comparable sales data quality is concerned, so you are not able to find comparable sales data, especially in tier 2 cities, where it is not possible to get three truly comparable sales within 6 months. That will be a challenging thing for you. So in that case, what will you have to do? You have to make reliance on older data or less similar property. So how it will affect? Because you can find this three or more than three comparable, especially in tier 1 cities or metro cities, but in case of tier 2 or tier 3 cities, it is not easy to find at even three truly comparable sales within 6 months. And for that, you have to look for older data. And you may not be able to find older data for similar properties. So what you can do in that case, you have to make each additional month of data requires a market trend adjustment, which is typically 0 to 1.5% in active month. 0.5% to 1.5% in active month. So this is the first thing, is comparable set data quality. Second thing is market conditions adjustment. Market conditions depend upon supply and demand dynamics. Supply and demand dynamics, basically they are economic factors. In micro and macroeconomics, you have studied these factors: supply demand dynamics, GDP growth, RBI interest rates, investor sentiments, market sentiments, you can say. These all shift the price level between a comparable sale data and the valuation date. For example, in India's residential market has seen both rapid appreciation 15 to 20% per annum in Hyderabad 21 to 23, and corrections 10 to 15% in National Capital Region in 2014 to 2016. So see, there are how much changes, 15 to 20% rapid appreciation during a particular period, and then 10 to 15% correction during a particular period. That too in a particular region. So you have to be conversant with the market conditions and how you have to apply adjustment in market conditions. And then you have
This,
to make,
sir, this 21 to 23 growth rate was COVID recovery.
yes, sir. That is a problem. Now that was for a particular time. That is what for you have to look for. So why it was so? So then property characteristics adjustment for particular type of property. So quantifying value differences for location, floor level, view, amenities, amenities such as clubhouse, pool, gym, parking count, and unit configurations. So this is for a particular property. What is the location of that property? What is the floor level over on which floor level it is situated? Whether it is having a scenic view, park front, or sea front property. What are the amenities available? Clubhouse, pool, gym, number of parkings available. So all these things affect the final outcome. We will be taking an example. We will not go into detail how the calculation is done, but we will use this basic valuation for our sensitivity analysis. You know the procedure, how it is done. That we are having the subject property in Bangalore's Sarjapur Road. Comparable is on the similar corridor, same corridor, and comparable C is on adjacent road. Area is 1350 square feet. Subject property for comparable A, area is 1450 square feet. 1200 square feet. For B, it is 1450 square feet. For C, it is 1300 square feet. Sale date, it is yet to be sold. It is to be valued. It was 4 months ago, it was 2 months ago, it was 1 month ago, it was sold for 1.08 crore, B was sold for 1.52 crore, then C was sold for 1.30 crore. Per unit rate is price per square feet 1.08 divided by 1200, 9,000 per square feet, 10,483 per square feet, and 10,000 per square feet. It is situated on 8th floor. Comparable A is on 3rd floor, B is on 10th floor, and C is on 7th floor. Parking, it is having 2 covered parkings. comparable A is having one covered parking, B is also having two covered parking, and C is having one covered parking. This is our building is a new building. Comparable A is 3-year old, B is also new building, and C is 1 year old. This is the data you have collected from the site. How the calculation is done, we need not to go in details. We assume that the average rate comes out to be 10,680 per square feet and the value is 1.44. So this is the data given to you, comparable A, B, and C. We apply the adjustment for 1% monthly appreciation is applied to account for the gap. For location, we apply a 5% premium to the comparable C. It is on adjacent road to match with the subject properties prime corridor. For physical features, our is on the 8th floor, 4.5% adjustment per floor difference. Then for parking, we add a flat 3 lakh per missing car covered parking lot. And is 2% per year depreciation for the adjustment. This is what we have assumed for adjustment. So with the comparable adjustment, we calculate these values. For comparable A comes out to be 10,375, for B 10,588, and for C it is 11,081. We take the average of the three, the value comes out to be 10,681 per square feet, and we multiply it with the area which was 1350 square feet, the value comes out to be 1.44. This all how it is to be done. We don't have to go in details. We have just discuss about the things how and what we have assumed. So now we will discuss about the sensitivity analysis. Let us suppose this valuation was done before during COVID or just after COVID. So India's residential markets are not immune to sharp corrections. The NCR market saw prices decline 15 to 20% in 2014-16 due to oversupply, and Hyderabad and Bangalore experienced COVID-related disruptions in 2020. Stress testing the market approach against a downward shift is essential for risk awareness. So let us suppose there is 10% market correction scenario. So what will happen? Why? Because RBI rates repo rate increases by 100 base points to 7.5% from 6.5%. So due to which it reduces buyers' affordability. Now new projects launches flood the Sarjapur Road and absorption slow by 35%. So what will happen? So let us suppose we apply a downward adjustment trend because there was more supply than the demand, and of course there was change in the RBI repo rates, because of which there was 10% adjustment, minus 10% we apply to all the comparables. So the comparable value of A comes out to be 1.24 crore into 0.972 crore, B comes out to be 1.386 crore, and C comes out to be 1.96 crore. So if we apply this to our property which was valued at 1.44 crore, post correction value is 1.295 crore. Means there is a value reduction of 0.145 crore, means a reduction of minus 10.1%. So the value declines mirrors the market corrections. So if we see here कि मार्केट में जो रिडक्शन हुई है उसी हिसाब से हमारी अगर रिडक्शन होती है तो the spread of outcomes narrows but all comparables moves in unison confirming market wide systematic risk. Now if we check other things, let us suppose we have assumed 3% floor level corrections. There was 8th versus 3rd floor. We have assumed 0.5% per floor. Difference of 6 is, instead of 3%, let us assume 7% adjustment. Value will move from 1.48 to 1.5 crore. And if it is extra parking, one additional parking, we know we have for every additional parking we have assumed 3 lakh. But instead of 3 lakh, if we assume 6 lakh for each additional parking, this was just an assumption. So the value will move from value will vary from 1.47 to 1.54. Similarly, if we apply the age adjustment, instead of 5%, we assume 8%, the value will be 1.5 to 1 to 1.55. So highest value, if you calculate, the value will vary from 1.65 to 1.37 to 1.652. So from the adjustment factors, assumptions can swing the value as much as 28 lakh. Means there is a variation of 20%. So this underscores the critical importance of driving adjustments from the market evidence rather than applying the rule of thumb percentages and documenting the basis for each adjustment in the valuation. So there are no thumb rules for applying. You have to make the analysis from where you can check what adjustment you can make. For risk analysis, so risk is basically concerned with the availability of data and the quality of data. Because in Indian scenario, it is not easily, data is not easily available, quality data is not easily available on which you can rely. So India's real estate transaction data ecosystem is improving but remains fragmented. While RERA mandates project registration and some disclosures, secondary market transactions data is often unreliable due to underreporting. This is where the problem. Though with the advent of RERA, you can get the maximum reliable data from the RERA website. But it is possible only in case the project is RERA registered. But in other cases, in the secondary market, transaction data which is available is mostly unreliable due to underreport, because most of the transactions are done on the basis of collectorate rates. Then data scarcity risk, especially in tier 2 markets, it is not easy to find 3 truly comparable sales within 6 months for a specific property type. We have to extend geographic or temporal boundaries, including greater uncertainty. And then underreporting, because most of the valuations, most of the transactions are done on the basis of minimum stamp duty. So the registered values may be 20 to 40% below actual transaction prices in some of the markets, fundamentally distorting the comparable data if not corrected. And then if the data is more than 6 months old, especially in the rapidly changing market, for example, Hyderabad IT corridors, which are growing at 15% per annum, without proper time adjustment can lead to significant valuation errors. So what you have to do in such cases? So these are just things which we can do, but they are not the final things. What you can do, include triangulating data from multiple sources, from RARA portals, IGR data, prep tech performs like Square Yards, 99 Acres, Magic Bricks, engaging local brokers of or off-market transaction intelligence, and explicitly documenting data limitations and their potential impact on the valuation. So nowadays, many things are available on different apps or websites such as Square Yards, 99 Acres, Magic Bricks. So their data is not reliable, but you can take certain things from there and make adjustment. And of course, you have to make explicitly documentation data limitations and their practical impact in the valuation report. That is what you have to mention your valuation report. So how it will be done? Many times there is one thing is bias. Many times valuers may unconsciously anchor to a client's expected value or a previous valuation. But that should not be the case. Mostly we rely upon the information given by the client, or he give us an old valuation or previous valuation report on the basis of which we make our assumptions. That should not be the case. And we do work backward valuation. Then inconsistent frameworks. Without standard adjustment grids, example, risk guidance, different valuers applying same comparable can arrive at materially different value conclusion. So for that, you have to do sensitivity and risk analysis. So what you can do? What are the mitigations? How you can reduce the chances of wrong valuations? Where first thing is paired sales analysis. How it is done? Where data permits drive adjustment from paired sales. Two similar transactions driving only one character sales. For example, two apartments in the same building, one with a garden view and one without, sold contemporaneously, provide market drive view adjustment that is far more defensible than a rule of the thumb estimate. यहाँ आपने दो ट्रांजेक्शन ऐसे लिए, एक अपार्टमेंट जो गार्डन व्यू था, पार्क के ऑपोजिट था, एक पार्क के ऑपोजिट नहीं था, सिमिलर फ्लैट कार्ड, और दोनों में कितना फर्क था उस हिसाब से आप एडजस्टमेंट लगाए, रैदर के एक थंब रूल के हिसाब से भी 5% 10% लगा। That will make the things easier, defendable. If it is possible, it is not possible in all the cases, but if you can do, you should go for it. So next is sensitivity and risk analysis in cost approach. So cost approach, what we do, the basic principle is it value the property by estimating what it would cost to replace or reproduce the improvements, then deducting accrued depreciation and adding land value. What we do, first of all, we calculate the amount required for replacing or reproducing the building. Then we apply depreciation over it, and then we add the land value to it. That will give you the value on the basis of cost approach. So for that you need replacement cost of a new building. How much amount, what is the per unit cost of construction of a new building? Means you calculate the replacement cost, then you apply depreciation. It may be physical deterioration, functional obsolescence, external obsolescence. Then to it you add land value, which is derived from the market approach. You add both of them, that will give you the total property value. That is the basic criteria in cost approach. So what are the key variables in sensitive analysis? First thing is construction cost per square feet. So now this is the thing which is the most important. It varies from generally basic industrial cost varies from 1500 to 2000 per square feet. And mid-range residential varies from 2500 to 3500 per square feet. And then there are premium commercial buildings which cost for which varies from 4000 to 7000 square feet. And then there are super luxury buildings where the cost may be 10,000 per square feet in today's scenario. So which is to be applied, how it is to be done? This is a basic thing in a cost approach. Cost of construction per square feet. This factor, so variation is here, the variation is of 1000 between lower to the highest. Variation is again 500 per square feet. Variation is 3000 per square feet. Variation is, see, it is more than 10,000 per square feet. There are certain buildings. So if you apply this 10,000 per square feet rate, then there will be much difficulty for you to defend your valuation. That how you have adopted this match rate. But of course, you know today's scenario, it may cost 10,000 per square feet. And then the depreciation part. So depreciation generally we apply straight line depreciation, or you may apply constant approach method or sinking fund method. And then functional obsolescence. So basically, in this case, we do not go beyond physical depreciation, physical deterioration. We never go for functional obsolescence. For example, so this is basically functional obsolescence. You know, it is because of loss in value due to design deficiency, outdated floor plates, insufficient ceiling heights, inadequate power supply for modern equipment, inefficient HVAC systems. We hardly take these things into consideration where the problem lies. For example, in modern logistical demand in warehouses, minimum in today's scenario, minimum height is 12 meter. It requires 12-meter clear height. Whereas older warehouses are at 6-meter face significant. So they are having significant functional obsolescence. So for the older buildings, we have to apply functional obsolescence also. So most of us are ignoring this functional obsolescence part. Now we, in 70-80% cases, we apply cost approach, but we only apply this physical deterioration. We hardly apply this functional obsolescence. And then, of course, there is another thing, external obsolescence. So the value loss from the factors of external property, increased traffic congestion, reducing accessibility, new competing development, environmental contamination, or adverse zoning changes in the surrounding area.
Incoming voice call from Sonu Haji 1234 on 6.
We generally ignore these factors. If some, अगर किसी ने कोई ऐसी चीजें की हैं तो वो अपना एक्सपीरियंस यहाँ पे शेयर कर सकता है कि कभी किसी ने एक्सटर्नल ऑब्सोलेंस या फंक्शनल ऑब्सोलेंस का केस किसी अपनी वैल्यूएशन में इनकॉर्पोरेट किया. Anybody having done this thing? Now we have learnt in during our MEP and other CEPs, but we hardly apply. Have anyone applied this in actual valuation?
देखिए, जितना डेप्रिसिएशन जरूरी है रिफ्लेक्ट करना आपकी वैल्यूएशन में, उतना ही ऑब्सोलेंस डिक्लेयर करना आपकी वैल्यू में जरूरी है. अभी अगर आपने पुराने कुछ ऑर्डर्स देखे होंगे जो वेबसाइट पर पड़े हुए हैं, जो पुराने वैल्यूअर्स के खिलाफ कुछ ऑर्डर्स आए हैं, उसमें दे फेल टू कंसिडर द ऑब्सोलेंस इन देयर वैल्यूएशन रिपोर्ट. नाउ दे आर फेसिंग द म्यूजिक नाउ. तो उनको बेचारों को ये भी नहीं पता कि ऑब्सोलेंस होता क्या है. वो पुराने तरीके से ही कर रहे हैं, लेकिन अब उनको मुश्किल आ गई है. आपको मुश्किल ना आए, दैट्स व्हाई वी आर टेकिंग दिस एफर्ट टू गाइड यू अकॉर्डिंगली. यस सर, ओवर टू यू.
Thank you, Sandeep ji, for your valuable input. So we are taking an example.
Incoming voice call from.
We are having a grade A warehouse near Mumbai's logistic hubs. This is the data. Total leasable area is 1 lakh square feet. Per square feet rate we assume 3,500 per square feet. Value of the replacement cost is 35 crore. We apply a depreciation of 5%. 5% of 35 crore is 1.75 crore. Functional obsolescence is nil. External obsolescence is nil. So total accrued depreciation 1.75 crore. For depreciated cost 33.25 crore. Land is 5 crore into 2 crore per acre. 5 acre is the land, 10 crore. So the total value comes out to be 43.25 crore. So this is the basic value. Now we will see how the different assumptions will affect the risk, will affect the value. So let us suppose we have assumed the value as 30,500. So if we change the cost per square feet from 3,500 to, if we reduce by 5%, 3,150. See, the total value will be reduced by, will come down to 39.93 crore by 4 crore. And if we increase the cost by 5%, 10%, 15%, 20%, 30%, the values will be goes on increasing from 43.25 to 52.75. We change the cost per square feet. See the total value. This will be the, we reduce the value, it will come down. This is your base. So from here you can see that the value, so the construction cost, it depends upon, especially in RCC, there are two things which are most important, that is cement, and second thing is steel. If any one of the two increases or changes, it affects the construction cost per square feet. So see, if there is 15% increase in the cost, there is 15% increase in the cost, so the value will increase 43 to 48.25. So there will be 3.75 crore approximately, it will be added to the valuation. So this has implication for, so what will happen if you have done valuation for insurance purposes? So you know what the insurance company will do. At the time of loss, they will calculate they will use the cost of construction of new building of prevailing cost of construction rate. And in that case, the value increases by 3.7 crore. If this value of the building increases by 3.75 crores in two years, what will happen? How much loss he will get in insurance compensation? Similarly, if we change the depreciation part, how the depreciation can impact the value? See here, scenario, we have 5% depreciation, value is 43.25 crore. Let us suppose there were certain issues in the building, moderate issues. We apply 10%, value will come out to be 41.250 crore. And there was significant structural defects in the building. We reduce the value by 15%, 39.75 crore. If it is severe deterioration, we assume 20% depreciation, value comes from 43.25 to 38 crore. And if we apply functional obsolescence also, 20% plus 5%. Value comes to 36.25 crore. See how the depreciation percentage. So basically, we assume the building is free from structural defects, but if we ignore the facts, though they are not visible by naked eye, but if they were visible, we saw there were certain cracks, and we ignore that. Instead of applying 10% depreciation, we have applied only 5%. Or if there were any functional obsolescence, we ignore that. How the value can change. So if we move from 5 to 20% depreciation, the value reduces by 5.25 crore, means a decline of 12%. And if we add another 5% for functional obsolescence because of ceiling height of modern racking systems, the value decreases by 7 crore, means 16% below base case. So this demonstrates why pre-purchase structural surveys by qualified engineers are indispensable for warehouses and industrial property in acquisitions in India. That is how you can mitigate this sensitivity, this loss, especially in case of warehouses and industrial properties. Structural defects and external and functional obsolescence has to be considered. Then in risk analysis, again that construction cost part. In construction cost, not only the material, labor is also a part. So labor can move during, as in the case of during COVID, skilled and unskilled labor was not available. That because of that, labor rates increases. That indirectly increases the construction cost. Then for construction cost, you know the two factors which are most important, steel and cement. During 2020, from between 2020 to 2023, the steel prices have increased from 45,000 per metric ton to 75,000 per metric ton. See how much difference is here. So cement prices, though they have shown less volatilities, but both, if you take both into consideration,
Cement prices seems to be stable due to GST reduction.
that is what. But even if now one of the factor changes, because they constitute 35 to 45% of the construction cost, cement and steel. And then, of course, labor. Labor cost is up to, if the labor cost is it is 25 to 35% of the construction. And and during COVID, the labor cost has increased by 20 to 30% in the last 3 years. And then there are contract structure mitigation. So what we can do, fixed price contract transfer cost escalation risk to the contractor. But command a premium of 8 to 12% cost over cost plus structure. अगर लंप सम के केस में अगर होता है फिक्स्ड प्राइस में तो रिस्क जो है वो कॉन्ट्रैक्टर के ऊपर पड़ जाता है, बट प्रॉब्लम इज दे चार्ज 8 to 12% over it. For long duration projects more greater than 18 months, what we can do, we should add price escalation clauses tied to the published indices. Published indices indices are given by Steel Authority of India, CII, cost, construction cost index, etc. And then for mitigating the risk, you must estimate functional and external obsolescence. Functional and external obsolescence are the most challenging depreciation components to quantify in India, but then they are most among the materials as technology-driven changes in the building use requirement accelerate and urbanization reshapes external environment around existing properties. As we have done in discuss that in warehousing, in old warehouses the height was 6 meters, nowadays it is 12 meters, especially in logistics. And similarly in office buildings, obsolescence is that of column-free floor plates, raised floors, HVAC systems designed for 1:8 occupant density are now minimum expectation. But in the older buildings, they were having columns in between the floors, means column-free floors was not available, and power capacity was less. For that, you have to apply an obsolescence of 10 to 20%. And external obsolescence example, for example, a factory on a previously arterial road that is now gridlocked during peak hours loses operational efficiency. Or when you are doing valuation, a shopping mall that faces a new superior mall 500 meter away may suffer 15 to 20% external obsolescence. कोई मॉल था उसके साथ एक नया मॉल superior mall बन गया within 500 millimeter away, 500 meter away, that will cost 15 to 20% less footfall.
सर ये क्या होता है HVAC systems designed for 1:8
एक्चुअली AC वगैरह का जो सिस्टम है they are HVAC, they are called HVAC.
तो वो 1:8 ऑक्यूपेंट डेंसिटी उससे रिलेटेड कैसे?
मतलब आजकल जो डिजाइन किया जा रहा है कि मतलब एक रूम में 8 पर्सन होंगे उसके हिसाब से डिजाइन किए जा रहे हैं, मतलब उस जो एरिया है कि कितने एरिया में कितनी चाहिए फॉर 8 पर्सन, उसके हिसाब से किया। जैसे हम वैसे टनेज में लेते हैं ना कि 1 टन का 1.5 टन का एसी,
HVAC means heating, ventilation and air conditioning. Heating, ventilation and air conditioning system. Yes sir, over to you.
ठीक है, तो
अगर आप उसकी
देयर
कैपेसिटी आप देखते हैं किसी भी बिल्डिंग में तो HVAC की फॉर्म में काउंट होगी। तो HVAC means heating, ventilation and air conditioning. Mostly it is also reflected in green buildings and other things. Yes sir.
Then environmental degradation, industrial pollution near residential property, reducing market appeal and value independent of the property's own condition. ये हमने कर लिया, ये एग्जांपल है, एक हमने ऑलरेडी डिस्कस कर चुके हैं ये पहले। कुछ और चीजें जो रेजिडेंशियल के केसेस में हो सकती हैं रिस्क में, इंटरेस्ट रेट इंक्रीज हो जाता है। तो मोस्टली यू नो कि with the increase in the interest rate, जो लोन लिया होंगे उनकी ईएमआई इंक्रीज हो जाएगी। सो फॉर एग्जांपल अगर हम एक बात करें कि if the RBI is tightening cycle, repo rate may increase by 50 to 100 base points over 12 months। एक साल में 0.5 से 1% इंक्रीज हो जाता है अगर रेपो रेट। तो क्या होगा कि अगर किसी आदमी ने someone has taken a loan of 90 lakh at 8.5%, तो अगर 1% इंक्रीज हो गया मीन्स 100 बीपीएस हो गया, तो जो ईएमआई उसकी 78,100 पर मंथ थी वो हो जाएगी 84,000 पर मंथ। तो बेसिकली 7.6% इंक्रीज इन द ईएमआई। So that will reduce the buyer's pool at current price points. So the chances are that its probability is medium to high, about 55%, that the chance it can change. So what it can do, it can reduce the prices from 5 to 8% downward pressure on achievable sale prices in 1 to 2 crore segment. So how you can mitigate such condition? Price positioning at lower end of the market range, offer deferred payment plans or developer subsidized interest for the first 24 months. Then second is project completion delay. This type of risk is also there. So what it can lead to? It can lead to construction cost overrun or labor shortages may delay delivery by 6 to 12 months. तो ऐसा केस अगर होता है तो आपको पता कि आज के डेट में रेरा की कंडीशन क्या है कि अगर डेवलपर जो है विद इन टाइम पीरियड अपना हैंड ओवर नहीं करता पोजीशन, तो उसको प्राइम लैंडिंग रेट प्लस 2% पेनल्टी देनी होती है क्लाइंट को। मींस कि अगर 100 करोड़ का प्रोजेक्ट है 200 यूनिट्स का, 12 मंथ डिले हो जाता है तो 8 से 10 करोड़ कॉम्पनसेशन एंड होल्डिंग कॉस्ट पड़ जाएगी क्लाइंट को। तो इसकी प्रोबेबिलिटी जो है वो 40% है पर मोर देन 3% इन इंडियन इंडस्ट्रियल डाटा। So how it can do? Build 50% contingency in project schedule and budget. Use RERA registered escrow accounts to demonstrate financial commitment to the buyers. टाइम पे ही बनाना चाहिए। तो ये स्टडी हमने पहले डिस्कस कर लिया आपको।
लेकिन सर जो है यूपी रेरा में तो ऐसा कुछ होता ही नहीं है
हाँ
सर,
जी
इतने सारे डिसीजंस हुए हैं लेकिन कभी भी जो है बायर्स के जो है फेवर में नहीं
सर,
है।
होता है या नहीं होता, जब आप वैल्यूएशन करते हो तो वो चीज आपने कंसिडर करनी है।
नहीं वो तो खैर सही है, हम लोग प्रैक्टिकली वो लोग सब कुछ
नहीं
करते
हो,
हैं।
क्योंकि कोई क्या नहीं होता क्या होता है अब उसमें अपने आप को इन्वॉल्व नहीं कर सकते। वो तो हमें भी पता है कि बहुत कुछ होना चाहिए नहीं होता, कुछ नहीं होना चाहिए वो होता है। बट
बिल्कुल
मेन थिंग इज दैट जो आज हमने स्टडी किया है वो आप अपने डे टू डे वर्क में आप इन्वॉल्व कीजिए। So basically, the purpose of sensitivity and risk analysis is not to eliminate uncertainty. इसका ये मतलब नहीं है कि uncertainty रिमूव हो जाएगी. It is to understand it well enough to make better decisions than those who ignore it. इसका जो मेन फंक्शन क्या है कि इससे ये नहीं होगा कि एलिमिनेट ही हो जाएगी, अनसर्टेनिटी तो रहेगी, लेकिन आप अगर इस तरीके से करोगे तो द पर्सन्स हु आर यूजिंग योर valuation report, they may be able to make better decisions, or you can provide better valuation report than those who ignore it. So by applying sensitivity analysis to identify value drivers, conducting a rigorous risk analysis to quantify threats and opportunity, integrating multiple valuation approaches with appropriate weighting, and communicating findings with the clarity and professional integrity, Indian real estate stakeholders can navigate uncertainty with confidence, transforming complexity of India's market from a barrier into a competitive advantage for those with analytical tools to master it. So, आज की डेट में आपको थोड़ा बहुत सॉफ्टवेयर का नॉलेज एटलीस्ट, और कुछ नहीं तो एक्सेल तो आना ही चाहिए. Only then you will be able to carry out the analysis. और सेकंड थिंग है कि मोस्टली जो चीज़ें हम इग्नोर कर देते हैं इनकम अप्रोच में, जो चीज़ें हम मार्केट अप्रोच में और जो चीज़ें कॉस्ट अप्रोच में हम कंसीडर कर सकते हैं, एटलीस्ट वो तो करें, सो दैट कि जो हम काम करके दे रहे हैं वी आर एबल टू डिफेंड दैट. सो दिस इज ऑल फॉर टुडेज क्लास. इफ यू हैव एनी डाउट वी कैन डिस्कस.
टॉपिक से रिलेटेड कोई भी आपका डाउट है तो आप पूछ सकते हैं. कोई भी डाउट नहीं है. मुझे लगता है सर पूरा का पूरा ही बाउंस हो गया है.
सर ये स्लाइड्स 36 जरा दिखाइए, उसमें लोएस्ट और मैक्सिमम लिया था, उसमें कैसे पिक किया, उसमें मैं समझ नहीं पा रहा था. 137 lakhs कुछ लिया था और 150. स्लाइड 36 है प्रोली.
सर ये जो सारा डाटा है ना वो ये वाला
सर शेयर नहीं हुआ, शेयर नहीं हुआ सर.
स्लाइड 36 में लोअर और हाईएस्ट रेंज आपने डिक्लेयर करी थी, कंपोजिट लोएस्ट एंड कंपोजिट हाईएस्ट. तो वो वैल्यूज मेरे को समझ नहीं आई. 165 लिया, उधर 137 समथिंग लिया, तो ये कैसे अराइव हुए उस
सर
टेबल
ये
में?
जो सारा डाटा ये जस्ट एक फिक्टिशियस डाटा एक्चुअली चेंज किया गया है बेसिकली.
अच्छा अच्छा, वो कैलकुलेशन में
जो
मिसलीडिंग सा हो
एक्चुअली
रहा था, तो इसलिए
जो
उसको
वैल्यूज
निकाला.
की गई थी ना बेसिकली वो
हाँ
ऐसे ही नहीं उठा ले कोई, इसीलिए कोई उसमें कोई चेंजेस की गई हैं. आपने जो मिनिमम और मैक्सिमम लेनी है
हाँ,
बेसिकली.
नहीं उसमें जो मिनिमम थे,
ये जो
मिनिमम का
जितना भी
एवरेज
डाटा था ना तो
उसमें मिनिमम का एवरेज करना चाहिए और
और जो
मैक्सिमम का
मिनिमम,
एवरेज, है ना?
जी जी
वो वैसा दिखा
जी
नहीं,
जी.
इसलिए कंफ्यूजिंग हो गया था.
तो बाकी मतलब जितना भी आपको ये डाटा दिखाया गया है ना वो सब फिक्टिशियस है डाटा. चेंज है डाटा जो
नहीं वो
एक्चुअल में
ठीक
दिया
है,
गया था.
समझने के लिए
हाँ
वो
हाँ जी जी
समझने
जी
के लिए
जी
वो
सर,
थोड़ा
आप
डिफरेंट.
जो समझ रहे हैं वो ठीक है सर.
ठीक है, ओके.
Any other doubt or question related to subject, today's subject? No doubt.
सर जो अभी श्रीवास्तव सर ने पूछा उसी टाइप का एक पॉइंट था
कि वो जो एक कैप रेट आपने 8% 10% और 12% वाला जो दिखाया था,
जी
है ना?
जी
और
जी।
फिर अपन ने बात करी थी कि अपनी जो वैल्यू आ रही है वो एग्जैक्ट सेंटर में आ रही है उसके,
अप्रोक्सीमेटली आ रही है। कोई
अप्रोक्सीमेटली,
एक्ट।
एग्जैक्टली
जी जी
एग्जैक्टली।
जी
तो
जी।
मेरा पॉइंट सिर्फ इतना, एक थोड़ा सा डाउट क्लियर करिए सर, कि अपन जो वैल्यूज ले रहे हैं उसमें वो थोड़ा सा प्लस माइनस 1-2% ऊपर करेंगे और 1-2% नीचे करेंगे, तो जो अपनी वैल्यू रहेगी वो तो करीब करीब हमेशा सेंटर में ही आएगी, या कुछ चेंज होगा उसमें?
चेंज होगा सर, वही तो एनालिसिस हमने करके देखना है ना,
मतलब वो
कितना
थोड़ा
फर्क
सा
पड़ता है।
उस पे थोड़ा सा एक बार थोड़ा सा और समझाएंगे सर, कि वो ऊपर आए तो क्या करना है या नीचे आए तो क्या करना है?
मतलब हमने ये देखना है कि हमने जो एजम्पशंस की हैं, अगर
जी
उसमें थोड़ा बहुत ऊपर नीचे करते हैं तो
जी
वैल्यू में अगर बहुत ज्यादा डिफरेंस आ रहा है
जी सर।
तो फिर हमारी एजम्पशंस में कोई प्रॉब्लम है, कहीं ना कहीं
ओके
डाटा में कोई डाटा।
ओके।
ठीक है ना। और दूसरा, हमने जो करके दिया
जी
उससे ये नहीं है कि अनसर्टेनिटी खत्म हो गई, उसको बता दिया हमने क्लाइंट को कि आपकी
ओके।
अगर कंडीशंस चेंज होती हैं
जी जी
तो कितना फर्क। अब जैसे हमने 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 कॉस्ट अप्रोच वाला किया, इंश्योरेंस के लिए आपने वैल्यूएशन करके दे दी। अब
जी
प्रॉब्लम ये आ गई कि आपने 3500 रुपया लिया था, एकदम से 4200 रुपया कंस्ट्रक्शन कॉस्ट हो गई।
जी।
ठीक है ना। तो जो रेट था 4500, तो अब उसमें क्या होगा कि वैल्यू जब वो इंश्योरेंस वाले लेंगे वो तो 4500 से लेके करेंगे ना।
जी
तो
जी।
उसके हिसाब से उसको जो लॉस कॉम्पनसेशन मिलना है उतना ही प्रो रेटा बेसिस पे कम हो जाएगा। तो
बराबर है
वो
सर।
अगर आपको कल आपने उसको बताया होता कि भाई कल को अगर ये चीज हो जाती है तो इतना हो सकता है, तो कल को आप के ऊपर वो इल्जाम नहीं लगाएगा कि आपने गलत किया। या आप उसको
ठीक सर।
बता सकते हो कि अगर कल को ये चीज होती तो आप उसी के हिसाब से अपना प्रीमियम आईडीवी दे सकते हो, इंश्योरेंस डिक्लेयर्ड वैल्यू दे सकते हो, मतलब उसके बेस पे आप अपना डिसीजन बना सकते हो। बेसिकली
मतलब
ये जो
जो मैं सम
सेंसिटिव।
जी 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 सर।
ठीक है, बेसिकली हमने उसको देना है कि ये सेंसिटिविटी और ये रिस्क एनालिसिस आपको करके दिया, इसके बेस पे मैंने तो जो देना था दे दिया, आप अपना डिसीजन इसके बेस पे बना सकते हो, चेंज कर सकते हो, मेरी वैल्यूएशन के
अगर
ऊपर नहीं जाना।
राइट
अगर
सर।
इंश्योरेंस
राइट
कंपनी
सर।
ने आज की डेट में 4200 के हिसाब से लेट इट बी वैल्यू ली है, 4500 के हिसाब से ली, तो अंडर इंश्योर हो जाएगा। अंडर इंश्योर के केस में उसको परसेंटेज कम मिलेगी। तो
सर
इसीलिए उसको हम गाइड कर सकते हैं कि सर ये सेंसिटिविटी हमारा इंडेक्स आ रहा है, तो इतने साल में इतनी वैल्यू बढ़ सकती है, तो बेटर है कि आप थोड़ा सा प्रीमियम ज्यादा लेकर अपने आप को सेव कर लें। अगर उसने प्रीमियम
करेक्ट।
ज्यादा दिया होगा, तो अगर अगर लेट इट बी उस दौरान फ्लक्चुएशन आ भी गई, तो उस दौरान वो सेफ रहेगा, और बाय द वे उसके साथ कोई रिस्क हुआ हैपनिंग, तो प्रीमियम तो बहुत छोटा सा अमाउंट होगा जो उसको बढ़ेगा, लेकिन जो उसका क्लेम मिलेगा वो बहुत ज्यादा डिफरेंस में होगा। तो फिर वो आपको
बराबर।
आपको अगले दिन आपको फोन करेगा, अरे आपने मुझे ऐसी वैल्यू दे दी, मेरा तो लॉस हो गया, मेरा तो ये प्रॉब्लम हो गई। तो उस केस में वो आपको आपको डिफेंड के लिए मिल जाएगा, सर मैंने आपको सेंसिटिविटी एनालिसिस नीचे लगाई थी, तो रेट बढ़ने के चांसेस ये थे या घटने के चांसेस थे। जैसे आजकल अनसर्टेनिटी है मार्केट में, आप रोज देखें, शेयर मार्केट किसी दिन 1200 ऊपर जाता है, किसी दिन 2000 नीचे जाता है, फिर 600 ऊपर जाता है, फिर 3000 नीचे चला जाता है। आज डाउन है, कल ऊपर था। तो
जी जी।
ऐसा ही कंस्ट्रक्शन में और लेबर में अभी कुछ दिन अनसर्टेनिटी आ सकती है या आने वाली है। तो अगर हमने ये एनालिसिस की होगी और सारा डाटा अगर हमने उठाया होगा, और डाटा आप रिसर्च करते रहिए, डाटा कहीं ना कहीं से आपको मिलता रहेगा। स्टैटिस्टिकल एनालिसिस बहुत जरूरी है। तो आपको
राइट।
एनालिसिस से पता चल जाएगा लेबर में क्या फ्लक्चुएशन आ रही है पिछले 6 महीने के दौरान, और मटेरियल में कितनी फ्लक्चुएशन आई है पिछले 6 महीने के दौरान। एक डाटा शीट बना के रखेंगे, ऑटोमेटिक एक्सेल आपको पाई चार्ट या फ्लो चार्ट बनाकर दे देगा। तो उससे आप सेंसिटिविटी एनालिसिस करके, वेदर इट इज अ प्लांट मशीनरी, इट इज अ एसएफए, और एसएफए में तो बहुत ही ज्यादा फ्लक्चुएशंस काउंट होती हैं, और लैंड एंड बिल्डिंग में नो डाउट थोड़ा कम फ्लक्चुएशंस होती हैं, क्योंकि मार्केट काफी हद तक रेट्स वगैरह स्टेबल होते हैं और जल्दी एकदम रातों रात नहीं बढ़ते हैं। लेकिन फिर भी अगर बढ़ते हैं, 6 महीने का हॉरिजन लेके चले, या 2 साल का लेकर चले, या 4 साल का लेकर चले, तो जैसे अभी इंश्योरेंस 3 साल की एक साथ होने लगी है, उसने आज इंश्योरेंस करा दी और 2 साल के बाद उसको कोई लॉस हो गया, और उस वक्त बाय द वे मार्केट फ्लक्चुएशन पर है, तो आपको क्वेश्चन में डाल देगा कि सर आपने मेरा लिए गलत करके दिया। दैट कैन बी सेव्ड अगर आपने उसको थोड़ा सा नीचे सेंसिटिविटी एनालिसिस में दिया, बेशक वो पढ़े या ना पढ़े, उस वक्त वो इंटरेस्टेड हो या ना हो। उस वक्त कभी कभी क्लाइंट बोलता है कि मैं 1000 रुपए भी फालतू नहीं दूंगा प्रीमियम के, मैं तो इतने कम से कम ही दूंगा। तो उस केस में आप बता सकते हैं सर मैंने तो आपको नीचे एनालिसिस दी थी, आपने पढ़ी या नहीं पढ़ी, दैट इज योर हेडेक, लेकिन मेरी तरफ से मेरा प्रोफेशनल काम पूरा है, आई हैव डन माय रेस्पॉन्सिबिलिटी ऑनेस्टली। ये उस केस में काम आ सकता है।
Thank you, Sandeep ji. This
Yeah,
is all
thank you.
from
Thank
my
you
side.
very much, sir. Thank you very much, sir.
Thank
Highly grateful for sparing your valuable time for this session. We are compiling today's technical session. अभी मैं